Good morning, this is the latest market news. I'm Uliana. Asian stock markets are mostly lower on Thursday amid increased risk aversion following the meltdown in Chinese stocks and on uncertainty regarding the Greek debt crisis. The Chinese stocks market has plummeted in recent weeks despite a series of market stabilizing measures by authorities. The Australian market is extending losses from the previous session, tracking the negative lead overnight from Wall Street and the continued fall in the commodity prices. Investors also traded cautiously ahead of the release of the Australia's unemployment data for June. In late morning trades, the benchmark ASX 200 index is up 0.35%. Crude oil futures for August delivery, the most actively traded contract, dropped $0.68 or 1.3% to settle at $51.65 a barrel on the New York Mercantile Exchange Wednesday. In the currency market, the Australian dollar bounced back from the 6-year low against the US dollar after the greenback fell amid the outage on the New York Stock Exchange. In early trades, the local unit was trading at $0.7426, up from Wednesday's close of $0.7384. The US dollar is trading in the upper 120 yen range on Thursday, down from Wednesday's close in the upper 121 yen range in Tokyo. Confusion over how the end game for the Greek crisis plays out will continue to weigh on sentiment today. Meanwhile, the Bank of England will issue a new policy announcement followed by a couple of US numbers that will offer early clues on the macro trend in July. US jobless claims 12:30 GMT. Economic worries have picked up over the past week, but the macro bears probably won't find much to chew on in today's weekly report on the new unemployment figures. Econoday.com's consensus forecasts these claims for the last week ticking down to a seasonally adjusted 276,000 versus 281,000 in the previous update. In any case, the trend still looks favorable, offering support for anticipating that payrolls will continue to rise at a healthy pace. It was the latest market news provided by ICO FX. Goodbye.